Everybody, this is Jim at freechartvideos.com on the road version of the S&P 500 Daily Update. It is June 9th, 2011, a little after 8 p.m. And I'm going to probably make this kind of brief because I have a really good connection here at the hotel. Upload time may be an issue. So all I want to do is I want to look at a couple things. And the first thing I want to say is, in yesterday's video I mentioned that the market's got to break this red channel right here that I'm highlighting. Wait a minute, before I get started, you know the drill. This is for educational purposes only, not meant to be used as investment advice. I'm not a licensed professional, just a guy that draws lines on charts. So what we have here? Well, we had this descending, what looked to be a descending bull flag, premature breakout, getting slammed down into that pattern, taking out not only the bottom of that potential, what was then a possible bull flag, but also taking out a line that is drawn from the 3.9 market bottom of 2009 through the right shoulder of the inverse head and shoulders that formed during the after the flash crash. This line is drawn on only 2 points. Okay, I want to remind you of that because if you had 3, it would be a lot more meaningful. But that said, that line did break. That to me was a warning sign. And now what we need to do is we need to figure out what's the market going to do at this point. You know, we were up today. I had a short position as a hedge. I got stopped out very early on. Really, I got stopped out right when it got over this this line right here. You know, it's possible that you know, I just thought that this should go down a little bit deeper, and I'm going to tell you why I thought that it might do that. And I think it might have been a little bit more healthy for the markets. Well, let me put it this way. I think the markets need to work this out a little bit. And I think that we need to go down to sideways for a little bit longer if this market is going to really do anything of significance in the future. Because if this line behaves as a legitimate trend line, then that is going to be keeping the S&P in check from this point forward. And I just really don't see this little kind of lazy moving up, how much? 8 points. No, 6 points a week on average for the next, oh gosh, who knows how long. You see what I'm saying? It's like if this is going to hold the markets in check, then it would be, you know, August before we would have a chance at getting back to this level here. And I just don't see the market doing it in that lazy a fashion. Does that make sense? Look here, when the markets went up in a nice rally here off this bottom, it was at a steep pitch. Off this bottom, a steep pitch. This market likes to really run when it gets going, and again, it looked to me like this slow sell-off was setting up another run. And you know, I'm hoping that there's still some of that impetus in the market, that maybe what's taking place here is just kind of what's a good way to put it? We're just putting the inevitable off. But in order for us to experience these kind of nice rallies, we can't do it now because this line's going to hold us in check if it behaves as a broken rising support line typically behaves after it's been broken. So what do I think? I think in order for us to get anything going with that kind of a strength of rally, then this market's got to go down to sideways a bit. Then you know, and it may happen that we don't see that move until August or September. But I just think this is something of a glass ceiling right now. And for us to get a good rally out of this market, I think it's got to back up a bit more. That's just a gut feeling. As far as technicals go, which is why you watch this, I guess, it's like we're probably going to come back for a back test of this red channel here. That may put in what looks like something of a double bottom. You know, this channel that I pointed out that had been working for the past 5 or 6 days may not be all there is to be said about what's going on in this since we made this high right here. You know, this is a little bit of a strange down thrust right here. You know, it may be possible that when we start to dissect this a little bit further, who knows, we may find something like this is working. I don't know for sure. I hate to be kind of I hate to be indecisive, but sometimes when you get these little narrow channels like this, they turn out being a channel within a channel. If you were looking at some of these videos back in late October, November, the S&P was in an ascending channel that was fairly wide, and there's this beautiful little series of run-ups to the top of that channel that were kind of narrow, and then a quick little sell down, then a run-up, and then a quick sell down, and it was like a perfect little series of repeating crests and troughs within that rising channel. So, you know, this is kind of strange to me, to be honest with you, that we were in this kind of controlled slide, and then all of a sudden got out of control. So, short-term trades, you know, we may get a bounce if we come back to that line, and even though this is a descending trend line, it's not descending at a real steep descent. So this could put up a little fight too. You know, one of the rules of channels is when a descending channel support line breaks to the bottom, like this one did, it's not always that big of a deal for the stock or for the index to get back over that line. Does that make sense? It's kind of like it acts as support gives, but since this is slanting down and the whole market is going down, it's not that unusual for things to get back above that line. It would be a little unusual at this point to climb back into this channel and bust out this one. I don't really think that's going to happen. But these are the lines of significance as I see them. And really, when we do technicals, that's all we do. We draw lines and we assign various prices to them. And so right now, what do we have? Well, you know, we've done this exercise before. We've got resistance, albeit light resistance, probably pretty strong resistance, and the only support we really have for short term is this line right here that we broke today. So then we get down to this low from that head that was of the failed inverse head shoulders pattern right here, and I'm kind of hoping the markets get to there. Because that would be a place where if we show some thing up and we show some type of bottoming pattern right there, that could be the spot where this could bounce for a good back test of this line at some point down the road. So anyway, look, I need to keep this brief because it's going to take forever to upload this. Take care. I appreciate you watching this video. I hope you get something out of it. Congratulations to those who maybe went long yesterday. I'll be honest with you, I didn't see a reason to do it, and I'd be careful. But anyway, I'm wanting something more definitive to present itself in the charts before I'm willing to dive in with any of the leveraged funds or anything like that. And guys, I'll tell you what I'm thinking. Right now, I've got a few select stocks that I'm going to hold on to long term, but I'm thinking maybe I'm going to start doing more with just the ETFs. And because my reads on the S&P 500 have been a lot better than reads on some of the individual stocks, because those guys, they just get squirrely, with company-specific news and interesting things that develop in world politics that have effects on certain markets and certain businesses that do business in different parts of the world. You know what I mean. So I'm just thinking out loud. I'm just really considering, since I've got cash at this point, mostly about 70% cash, I'm thinking maybe the index-based ETFs are going to be the way to go from here on out. But look, you guys take care. I appreciate you watching the video. Come by freechartvideos.com and spend a little time.